This week's rally caught so many people in the stock market off sides that it ended up making the stocks rally even further than they did before. So let's take a look at the moves I made in my own portfolios and why I did what I did. Is cloud computing making a comeback? This week, Twilio was the winner in the portfolio, gaining 11.76%. Turns out that everybody who was thinking that Twilio was dead and that no one was going to want to have cloud computing was thrown off when it turns out artificial intelligence will take place in the cloud. As a result, Twilio found a pop, and it looks like it might be heading higher from here, even though it is much lower than its all-time highs. With retailers reporting that the consumer is pulling back and rumors swirling that China might try to invade Taiwan, this week's loser was Nike, which has exposure to China because that's where their shoes are made, but also that's where a lot of their consumers are. Additionally, there are a few products that are more discretionary than expensive sneakers. So this week, Nike lost 4.54% and was the loser of the portfolio. Is the artificial intelligence craze ever going to stop? Palantir Technologies popped 23.26% this week on no news outside of the fact that it has exposure to artificial intelligence. And this is where all the investors are piling in. So Palantir was this week's winner. Is cannabis dead again? The Safe Banking Act has turned into a Christmas tree, with every congressperson hanging a different amendment on it, which means it's never going to pass. As a result, stocks in the cannabis sector got hit particularly hard this week. And in this portfolio, that means GRWG, which dropped 12.38% on the week and is this week's loser. Until Congress can smarten up and pass the Safe Banking Act in a minimal and thin bill, it's never going to happen, and the cannabis sector is going to be under pressure until this happens. Is it time to double down on sports betting plays like DraftKings? I took profits at $22.84 based on the fact that it looked like DraftKings was rolling over. I ended up being wrong. DraftKings ended up rallying after I sold, but I still have no regrets. This sale locked in 36.36% in gains on shares that I bought for $16.75 back on March 11th of 2022. Since DraftKings is under my cost basis, this sale did end up raising my cost basis by 5.13% from $31.35 to $33.05. However, if DraftKings keeps rallying the way it has, it's going to end up crossing over that new cost basis in no time. I do believe that sports betting is a great investment for the future. However, we've seen such a rally across the board that I wouldn't be surprised if we see a pullback if there's any kind of sell-off in the markets. Accordingly, my next buy target is $13.24, above a key level of support that DraftKings has seen repeatedly in the past. And my next sell target is above my cost basis and below the next key level of resistance at $42.06. Are artificial intelligence stocks just going to go straight to the moon? I've been in Nvidia since 2016, and it's the biggest position in my portfolio. This week, it outgrew the target allocation by such a large margin I had to take more profits. I made a sale right when it looked like Nvidia was topping at $318.03. This sale locked in 1,929.55% in gains on shares that I bought when I originally opened the position for $15.67 back on September 6th of 2016. My next buy target is at $208.21, and although that might sound crazy because it's nearly 35% down from here, Nvidia has regularly sold off 35 to 50% in just the 7 years I've held the stock. My next sell target is right around Nvidia's all-time high, where it will have once again outgrown the portfolio allocation target at $346.53. I do believe artificial intelligence is here to stay and that Nvidia will be successful for the long term. But it's gotten such a fervor behind it that it's time to peel off profits. Is the big tech rally ever going to stop? I don't know, but in my speculative portfolio, I decided it was time to add more to my short position, the ProShares UltraShort QQQ ETF that has the ticker symbol QID. I added to the position in the middle of the rally this week with a buy at $16.76. The QID is a triple leveraged inverse ETF. In other words, it moves to the opposite of the Nasdaq 100, the QQQ, by 3x. So when the Nasdaq rallied this week, the QID sold off significantly. and this buy lowered my per share cost 1.07% from $18.75 to $18.55. From here, as you can see, the QID is already approaching my next buy target of $15.80, a point of support from the past. And my next sell target is $19 even, a point of resistance that the QID is seeing. And if the Nasdaq rolls over, this will start reversing in a hurry. Do you think that the rally in the S&P 500 is starting to lose its legs? I do. I added to my short position that I have in my speculation and play portfolio the ProShares UltraShort S&P 500 with the ticker symbol SPXU. This triple leveraged inverse ETF does the opposite of whatever the S&P 500 does. So when the S&P 500 rallied this week, the SPXU triggered my next buy target at $12.85. This buy locked in a 9.19% discount on shares that I sold for $14.15 a few weeks ago on May 4th. From here, my next buy target is at $12.50, right around a point of support that the SPXU has seen in the past. And my next sell target is at $13.95, just under a point of resistance that we've seen in the past. If the S&P continues to rally, I'll continue adding to my short position. This is a very small position in my portfolio that I have just for fun, but I do believe things are starting to feel frothy. With all the different catalysts on the horizon next week, it's going to be an exciting time in stocks. So stay tuned and we'll see what happens next. If you want to learn more, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help the channel out. And I'll see you in the next video.